The Basel Committee on Banking Supervision sets capital adequacy requirements for banks internationally. In Australia then, those standards are implemented by APRA, the Australian Prudential Regulatory Authority. APRA was in fact one of the regulators introduced following the last financial system inquiry, the Wallace inquiry back in 1997. A number of the submissions made to the financial systems inquiry did say that APRA's capital requirements, as it's being implemented in Australia, does inhibit the provision of credit and increase pricing. What the report found though, through direct data provided by APRA and others, is that in fact their capital requirements don't inhibit credit directly or increase pricing directly, but rather the limitations we see in credit at the moment are really just a product of the increased risk of the actual cost of doing business and the heightened risk that's being recognised by lenders generally across the board. What the report did, however, say is that internal risk weighting methodology, which is able to be employed by our four major Australian banks and Macquarie, so an internal risk weighting method to, assess risks in any lending it does, do have an inherent and inbuilt competitive advantage that they improve pricing as compared to anyone who has to implement the standardised risk weighting methodology, which are all the other lenders other than those big four and Macquarie. The internal risk weighting methodology was a framework that was established under Basel III, and really only sophisticated institutions that have had their internal risk weighting methodology approved by their regulator, so by APRA in Australia, are entitled to use that instead of using a standardised methodology. As a result of this clear recognition of the competitive advantage, the inquiry has called for further submissions from the industry as to what could be perhaps done to narrow that gap and ensure that competition, which was one of the key tenets that Joe Hockey put forward in the terms of reference, that there is competition in the banking industry. Some of the options that were put forward is a tiered standardised risk weighting system to lower the standardised risk weight generally or for particular sectors like residential mortgage lending, or to increase the internal risk weight setting. And all of these obviously aimed at decreasing the gap between the internal risk weighted banks and the general lending industry. There are a lot of limitations with all of these, and particularly our regulator and the inquiry will be at pains to ensure that there isn't we're not tarnishing our international reputation with those. So I think that actually there will be a favouring to sticking to our obligations under the Basel framework as opposed to going out on a limb, although there might be some merit in allowing these smaller institutions to have some form of internal risk weighting for perhaps a sector like residential mortgage lending.